Hi, welcome to this video where I discuss investment and portfolio management in the time of the coronavirus mayhem. Just a status update. Today is March 30th, 2020. Market's down a lot everywhere. There are many dead, about 40,000, which is looking like it's going to go up, potentially even dramatically. Many countries are in a lockdown with businesses and schools shut, and people are effectively housebound. The economy is taking a dramatic turn for the worse along with the markets. So our outlook is pretty grim. But there are glimmers of hope in terms of treatment, testing, confinement, and potentially even a vaccine. I obviously personally have a view on all of this, but I don't have any particular insight into the outcome of the coronavirus. But what we'll talk about is how we should think about investing and portfolio management at this time. So as I said, markets are down a lot. I argue in other videos how it's vanishingly unlikely that individual investors can outperform the markets through active security selection. So we talk about equities. That means picking Facebook or Google or any other stock as opposed to taking the broadest, cheapest market index that you can get your hands on. That was true before the pandemic, and that's still true today. So you're very unlikely to invest profitably by trying to outperform the markets. And as a result, you should buy the broadest, cheapest index tracker you can get your hands on. You're also very unlikely to be able to outperform the markets by picking the time to get into the market. So basically market timing. That was again also true before the pandemic, and it's still true today. And I want to say on that, markets don't always bounce back. It's not always the case that markets that go down a lot go up a lot. There have been many cases throughout history where markets have literally gone to zero. And even in this generation, the Japanese market are down a lot from where they were 30 years ago, certainly when you inflation adjust. So what can we do though? So don't pick stocks, don't pick market timing, but you can think about your portfolio in the context of this new reality. We know the risk is up a lot. And it probably feels obvious to most people at this point, but you can look at the VIX index, which is a market for the future volatility of the equity markets. It's not a perfect, but it's a pretty good sign, and it's up about 3 times or 4 times. So basically saying that the future risk, this is near-term risk, is 3 or 4 times as likely as high as it was before the pandemic. So you can think about, can my portfolio bear this? Do I have this kind of risk tolerance for this new reality? If you do, it's not unreasonable to expect higher returns in the future that come with higher risk. Risk return obviously go hand in hand. So if you can, it may not be a bad time to get into the market, but you obviously got to be able to bear the much higher risk, because there's also a risk that you lose a lot. In other videos, what I encourage you to check out, I explain how you can actually make a very robust investment portfolio with just 2 securities. One being a global equity index tracker that's as cheap, diversified, and tax efficient as you get your hands on, and the other being your local government bonds at a minimum risk asset with a maturity that matches your risk horizon, your time horizon. You combine those two so that they fit your risk profile, and you're kind of done. That's actually quite a robust, theoretically and practical portfolio. Now, you obviously, in light of the pandemic, you do want to consider the creditworthiness of your local government bonds. Governments are spending a ton of money, both on health and injection into the economy, and one day that may impact their credit quality. So do keep an eye on whether your government bonds are as low risk as they were before the pandemic. But that's outside the scope of this video. So reassess where you are today. Consider your portfolio, but consider not just your investment portfolio. It's very likely that this pandemic will have impacted your job. You may even have lost your job security, the value of your career, or your ability to get future jobs. It's impacted the value of private investments you have. It's impacted the value of your house, potentially, of the local economy, certainly if you're involved with travel and tourism, etc. And you need to consider your new reality in light of all this. I would strongly encourage you, if you're confused, if you're maybe even afraid, you're unclear, talk to a financial advisor. This is a great time to connect with someone who can help you with your life goals and put things in perspective. And they may even have insights into government aid or future taxation. I will say in general, with a global pandemic, the benefits of diversification for buying a global tracker has been less than it would be in other types of crises. But it still makes sense because you don't know how your local market will be impacted by this pandemic and what will happen going forward. And besides, you want to diversify away from all of these assets that you probably have, again, your house, your job, and so forth. I also don't want to sound alarmist, but obviously, and I don't think it'll happen, but obviously it's possible that things take a massive turn for the worse from here. So this could be a complete breakdown in society where everything goes to hell. How we react to that does really depend on how there is this breakdown. So I don't really want to speculate. But in my book, Investing Demystified, I did write a chapter called Apocalypse Finance that goes through various scenarios and how we should think about investing in that context. And if you're interested in this somewhat dark chapter, I've added a link to it in the comments section below. But I hope you found this video informative and interesting, and I also hope we all see each other on the other side of this horrible virus.